We're going to look at a transaction where a company made a journal entry that was done incorrectly. And one of the issues we're going to wrap up in this is that that company also then has to make a year-end adjusting journal entry with regard to that transaction. And what I want you to be able to do is be able to do this correcting entry and adjusting journal entry all in one single journal entry. So let's start this out. So let's assume a company received $10,500 for 6 months of rent. And this amount was paid on November 1st. Okay? When they recorded it, their recording of the transaction was this. They recorded cash of $10,500 and rent revenue of $10,500. Well, hopefully we all know by this time that's not what they should have done. What they should have done is recorded cash of $10,500 and unearned rent revenue, which is a liability of $10,500. So here's what they didn't do this. This is not what they did. Okay? What they should have done. So then how do we fix this? The way to do this is with T accounts. Okay? And I'm going to put 2 T accounts. And the T accounts we're generally going to use are what they did and what they should have done. So in this case, they recorded the rent revenue T account, but they should have done the unearned rent revenue T account. I'm kind of sloppy with my writing. I apologize. Now, the first thing you want to know is what we put in the beginning balance of these 2 accounts. And what we're going to put in the beginning balance is equal to what was recorded. So in this case, what was recorded was $10,500 in the rent revenue and 0 in the unearned rent revenue. So that goes in the beginning. We're going to jump ahead to this T accounts because we're doing a T account analysis, and we're going to look at the ending balance. The ending balance is going to be equivalent to the ending balance of this account at year end after adjustments. So after all said and done, how much should be in this account? This is actually not too bad. So we can take the $10,500 and we divide it by 6, and we get a number of $1,750. And we know that 2 months expired, so they rented the place for November and December. And so there should have been 2 months of rent revenue recognized. So 2 months times 1750, I believe, is 3,500. So that's how much rent revenue they should have recorded for the year after all the adjustments. Okay? Well, if we take that same 1750 and we multiply it by 4, we get, I believe, a number of 7,000, which makes sense. It's double the previous one. So there should be an ending balance here in the unearned rent revenue account of $7,000. Okay, so we have the beginning balance and the ending balance in both these accounts. Now what we need to do is, what makes this balance? Well, if we put 7,000 as a debit in the rent revenue account, that makes this account balance. 10,500 minus 7,000 equals 3,500. And if we credit $7,000 in the unearned rent revenue account, that makes that balance. So with that, then, we have our 2 journal entries. The 2 transactions we need to record to make everything balance at year end. So in this case, then, our journal entry will be, rent revenue of $7,000 and unearned rent revenue of $7,000. And these are the two amounts that we took from here. The unearned rent revenue was a credit of $7,000 and the rent revenue was a debit of $7,000. And that's what we came up with here. So that's one way to do an adjusting and correcting entry in the same journal entry. So let's attack another problem here. Now let's look at one where the company paid something. So in this situation, we're going to say this company paid for 9 months of laundry service. Let's say it's a kitchen, and they paid $3,600 for that 9 months of laundry service. Now, when they recorded that journal entry, initially, they recorded laundry expense for $3,600 and cash of $3,600. But we know that that's not correct. What they should have done, I got to give you a date on this, don't I? Let's say they paid for this on August 1st. That would be helpful. What they should have recorded was the cash going out, of course, of the $3,600. But what they should have recorded as a debit was prepaid laundry, which is an asset account because, again, they have some type of assets. They're going to get some future economic benefit from this. So how do we attack this then? Well, we're going to record two T accounts. One is going to be laundry expense, and the other is going to be prepaid laundry. We're going to put in the beginning balances what actually happened. So what they put in laundry expense, they debited that account for $3,600. And what they put in the prepaid laundry account was $0. Again, this is what they should have done. And again, I'm just putting that up here for example. This is not what they did. Okay, so we can ignore this part of the transaction. Now the next step in is to look what should be the balance in these two accounts at year end. So if I take $3,600 and divide it by 9, I believe that's $400 a month. How many months elapsed? Well, we have August, September, October, November, December. That's 5 months. So if I take 400, multiply it by 5, I'm going to get $2,000. And that's how much they should record in laundry expense for the year. If I take that same $400, they have January, February, March, April. They have 4 months left on this contract. So 400 times 4 is 1,600. So they should be recording in the prepaid laundry account $1,600. Okay, so since we have the beginning and the ending balances in both these accounts, then we can merely put in what is the balancing figure. So to make this laundry expense balance, we have to credit the laundry expense for $1,600 and debit prepaid laundry for $1,600. Again, these two numbers then are the guide for our year-end adjusting / correcting journal entry. So in this case, that journal entry will be laundry expense. Excuse me, I gotta switch those around. Got to erase that. Go back to my pencil. That is going to be prepaid laundry for $1,600 from right here, and laundry expense for $1,600 as my debit, which is right here. So I've got my debit of prepaid laundry and my credit of laundry expense, and I am good. So this is a video on how to do an adjusting and correcting journal entry in one fell swoop.